Okay, well, we are a day away from the next interest rate decision from the Bank of Canada, and while economists are not expecting a change in rates from their current 5% level, the Premier of Ontario, Doug Ford, kickstarted another conversation around politicians calling out the central bank after he sent a letter to Tiff Macklem urging the Bank of Canada governor not to take up rates again this week. Well, we've had a story on our website today about how Macklem had warned premiers that doing this, publicly asking the bank to do or not do something, that could undermine the bank's independence. Macklem had sent a letter on that subject last month. We got some reaction to all of this yesterday from economist Andrew Kelvin of TD.
I think the Bank of Canada's sometimes inconsistent messaging last year has invited some of this political pressure. It opened up this perception that they are open to political influence. I don't think that what they hear from the premiers is having one iota of impact on what they're deciding to do. But this is the second meeting in a row we've heard from premiers asking the Bank of Canada not to lift rates. They can't be happy with that. And if anything, from my perspective, that just increases the urgency of bringing inflation back to target.
Philip Petursson back with us now, Chief Investment Strategist, IG Wealth Management. That was an interesting comment because in the markets, we really dig into how a central bank is communicating. And his perception is that some inconsistent messaging by the Bank of Canada may have invited politicians thinking that they can do this to have some influence over the process. What do you make of it?
Well, that could be the case, but again, the Bank of Canada is not infallible. I mean, they can make mistakes. They are data dependent. They are looking at it and trying to chart out the best path. I think there's a real risk or moral hazard when politicians decide to involve themselves in monetary policy. And, I think it might be a little bit more pandering to the base as opposed to trying to find a solution. If it wasn't the high interest rates, then you could blame someone for the high inflation or weak economy. I think they're best to stay out of it. Let the Bank of Canada do its job, and we will get through this eventually.
What do you think the Bank of Canada has to do tomorrow if they want to be clear in their messaging?
Well, I think they should indicate that they're comfortable with where we are from an interest rate perspective. They don't see the need for further interest rate hikes going forward because they are seeing the desirable impact on the economy that is slowing down the economy sufficiently to continue to bring inflation closer to their target over time.
And you think the bank is going to stay on hold with rate policy for now?
Yeah, I would say I'm 99% sure that the Bank of Canada is done raising interest rates. You always leave that 1% open just in case they decide to change their mind. But again, from our perspective, all indications would lead to the Bank of Canada being done and pausing at this point.
Phil, before I let you go, I just want to talk about the geopolitical reality that we're watching unfold right now with the Israel-Gaza war and the Israeli military. Looks like the latest commentary suggests there could be weeks of fighting ahead. And yet it's still not clear about how things are going to play out with a ground invasion into Gaza. And it felt like we were seeing some of this play out in the market yesterday. We mentioned oil prices had their biggest slide since that war unfolded. How are you watching it as a market participant?
Well, at this point, everything is speculation. There's nothing that has happened that we can quantify to have a meaningful or lasting impact on the market. So it's speculation as to whether an oil-producing nation is going to be pulled into this. It creates uncertainty. Uncertainty is the nemesis of the market. So any given day could trigger fear on the part of investors that will drive them to sell, move to safer assets. We're seeing it with gold, for example.
Yeah.
It creates a little bit more challenging environment, but not necessarily a damaging environment.